Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is March 13, 2023, and I'm going to go over your three threes for the week. I'm going to go over the major asset classes, their performance, and what a week it was. We had a down week last week, and so far the futures are down this morning. And I'm also going to go over how we are positioned on the short term for both equities and bonds, and then our top three market movers for the week. So let's jump on in.
Okay, let's go over the top three market headlines from last week. And we are showing this because a lot of the headlines from last week actually affected the market. And this is how we can see both of those on one graph. The number one was Powell's testimony to Congress, and he was pointing towards elevated interest rates. There were projections for 4 more interest rate hikes, and that was on Tuesday, and the market did not like that. So that started off the week on a negative note. Now, that may change after what we get through here in just a minute, but at least through Tuesday, the market didn't like that. On Wednesday, we had private sector growth, and that was actually higher than expected, came in at 242,000 jobs. Market kind of like that, went flat, just slightly up. On Thursday was the first inklings of the Silicon Valley Bank collapse. That led into Friday, and also the non-farm payroll came in hotter than expected, which means that the Fed is going to have to continue to raise interest rates, at least as of Friday. The equities sold off and the safe haven gold and bonds actually went up. So you can see that from this graph. All right, let's take a look at some of the performance. I just went over this week. And as you saw, we had a lot of negative numbers on the equities. And the bonds and the gold and the US dollar basically were flat to up. On a 3-month basis, though, you see we're getting a lot of negative numbers across the board, even on bonds and on equities and real estate. And again, the only safe havens are gold, the world ex-US, and the NASDAQ. Actually, tech is faring very well because it actually fell the most prior to this 3-month period. On a 1-year basis, however, we still have a lot of negative numbers across the board, the only safe haven being the US dollar. All right, let's go over the top 3 major asset classes on a long-term basis for March 13th. We did have a change. Gold jumped into the top 3. So that jumped to mid-cap equities. So defense has taken over. A lot of this had to do with the headlines from last week. We will see if that trend continues, but at least for right now, the defense is back on the field. All right, let's go over the bonds on a short-term basis. With the equities selling off because of the bank situation, we actually saw the interest rates come shooting down. They are now at 3.69 as of Friday. And so we are now selectively buying back into the bonds that we just got out here just a couple weeks ago. And if we're going to go back to defense, then hopefully these bonds will be a great addition back to the portfolio. All right, let's go over the equities on a short-term basis. They were the biggest winner. Now they are selling off, and now they're barely up year to date. And as you remember, we got out back in February 23rd. Didn't look like a great trade, but it turned right back around. We're actually a little bit below that support zone, so most likely we'll end up trading in here. But if that fails and comes back down, look out. We could start testing some of these other lows or support areas, even possibly retest the October lows, which would not be a great sign. All right, let's go over the top 3 market movers for this week. On Tuesday, we have the big CPI number coming out in the morning, and that's our look at inflation, and that will kind of give the Fed the kind of go ahead that they're going to go ahead and continue to raise interest rates, or hey, this is working. Maybe they can pause. And a lot of that has to do with all this instability that's going on in the market because of all the run on all the banks and the bank closures. So this will be a huge number on Tuesday morning. And right now it's anticipated to have risen by 0.4 last month, given our annual year over year at 6.2, which will be lower than 6.4 last month, which is what the Fed is hoping to see. On Wednesday, we follow up with the producer price index and retail sales. This tracks manufacturers and wholesalers for the PPI, and that's also as projected to have risen 0.3. And that's likely to come in at a 5.7, also coming down from 6% in January. Retail sales are likely to have edged a little bit higher. They had a huge January after the holiday season, so they're just slightly going to be up. We'll see kind of how that affects the market. On Friday, we have consumer sentiment index, and right now they're still projected to be above where they were in February at 67.5. So that's a positive. Anytime that we're over 50, that's a great sign. So that's a positive heading into the end of the week. That's it for this week. Thank you for joining us. Our next update is Monday, March 20th. As always, continue to subscribe, like, and comment, and we shall see you next week. Have a great week trading.